going to be a video on how to use my New York ORB trading indicator. I'm going to go over all the specifics on how to use it so you can use it for the highest probability trades. But before we get into that, if y'all like content like this, please don't forget to smash the like button, subscribe button, and notification bell. So this indicator goes with the ORB strategy that I teach. If you want to see the ORB strategy, I made a video on it. Just check my channel and it'll show you exactly how to do it. Now before we start, this indicator is made specifically to work on the ES. It does work on other things sometimes, but you're going to have the best results if you use it on the ES or MES futures contracts. Okay, now to use this indicator, the first thing we're going to do is make sure we're on the 1 minute time frame. That's very important because we need the 1 minute for our entries. And the first thing you'll notice is you're going to have this gray range right here, and inside the range is a green line. This green line is meant to serve as where you put your limit order if you're going to go long or if you're going to go short. First, we need to decide if we're going long or short. So what we're looking for is a breakout of this range that happens after 9 o'clock. Now in this situation, the breakout happened before 9 o'clock. So it happened at 8:33 it broke out. So since this happened before 9 o'clock, we're not going to count this as the breakout that we're looking for. You notice that price kind of stayed outside the range for a while. So let's play it slowly and see how it goes. Now right now it's about 9:35. You see the price is still outside the range. It has not touched the range at all. So at this point we're still looking for a breakout of the range, but the range has to get entered into first. So at this point we're still looking for a breakout of the range. So we'll see what happens as time goes on. Now at this point the price just entered into the range. So we have to see what happens after this to know if we're going long or short. Now right here we see that there was a breakout of the range. So anytime we see a breakout of the range, and sometimes this will create a sell signal too to let you know that you should go in to sell. Once this is created and this range is broken out right here, as you can see this red candle broke out at 9:49. At that point we're going to start looking for a short sell, so we're going to put our limit order at this green line. Now that we have a sell signal, it's time to place the limit order. Let's go ahead and place that on the line and see how it plays out. Okay, now that we got our limit order placed directly on the green line, we're going to go ahead and set our stop loss. Our stop loss is going to go just a little bit above the range. So the range ends right here. I'd probably put my stop loss above the wick of this last candle that went up. So it just got to be a little bit above the range. Once you have your stop loss set, you want to make sure that your take profit is at least a 3-1 risk to reward, meaning that the profit will be 3 times more than what you're risking. So in this situation, we'll go ahead and drag this to where a 3-1 risk to reward will be. Okay, right here we got a 3-1 risk to reward. Now let's see how this plays out. Now we just see that this candle right here at 9:53 tapped us in right here. You can see the top of the wick right here. It wicked up, tapped us into the trade going short, and we're going to see how it goes from there. On this candle at 9:59, it wicked down here and we would have hit our take profit. We got in this trade at 9:49 and we would be out of the trade by 9:59. So that would make this a 10-minute trade. Now the indicator puts these suggested take profits in here. It's a take profit 1 here and a take profit 2. But for the safest results, always do a 3-1 risk to reward. Now if you do want to be a little riskier, you can move your take profit to this take profit 1. Now at this point you'd be over a 4 risk to reward ratio, which is even better. So let's see how that would have played out. Now if you were willing to hold this trade a little bit longer, you see that it would even hit this take profit 1. So it just kind of depends on your risk tolerance. If you want to have a higher probability win, I would go for the 3-1 risk to reward. But if you want to be a little bit more riskier, you can always use the recommended take profits. The price often does hit these take profits, so it's not that much riskier, but it is something you have to consider. You would have to sit in the trade through all of these up and down movements and wait for that. It didn't actually hit this take profit till 10:34, so this would have been a much longer trade, but still you would have been out the trade within 30 minutes, so it's still not too bad. So let's do one more example. All right, in this scenario right here, we see that price broke out around 8:20, but that's still before the 9 o'clock window that we're looking for a breakout, so we would ignore this breakout. It comes back into the range, and then we notice that it breaks out a little bit around here and comes back in the range, and it breaks out one more time at 9:03 right here. So since this is after our 9 o'clock window, that means we're looking for longs because it's broken out of the range going long. At this point, we will place our limit order right here on this green line to go long. Right, in this situation, we're going to put our limit order right here going long. So it's right here on this line. Our stop loss is going to be a couple ticks below the range. So we're going to go ahead and adjust this. And then we're going to make our take profit at least 3 times more than whatever we're risking. So in this situation, the take profit will be right here at this level. So let's see how this plays out. The price came in and tapped us in right here At actually 928, it tapped us in. If it didn't tap you in at 928, you would probably got tapped in at this 930 wick right here. Price immediately opens up his take profit at 932. We got in this trade at 928, and 4 minutes later we hit our take profit. So you see, as soon as the market opened and tapped us in, it kind of skyrocketed up and hit our take profit. But if we would have had our take profit a little bit higher at that TP1 zone, that would have brought our risk to reward up to 4.7. Now there's also a blue line for a TP2 up here. Let's see what would happen if we just let the trade run. And we see right here we also hit TP2. TP2 is always the most risky one, so if you're new and you're starting out or you got a small account, definitely just take the 3-1 risk to reward. 3-1 is a very good risk to reward ratio. If you can make it all the way up to TP1, it's even better. But the name of the game is not being greedy. You got to take the money the market gives you and get the fuck out. Now, this is just 2 examples of how to use this. The main information to remember from this video is that you do not take a breakout that happens before 9 o'clock, no matter what. You never trade this on a news day. Sometimes it'll work out, sometimes it doesn't. But you want to have the highest probability of your trade winning. So make sure you're going to check out the economic news. If you don't know where to find economic news, I'll put a link in the description. Also, if you're in the Discord, we have this weekly news section, and I post the news for the week every week. Now, something y'all should know about this is not a magical indicator. This strategy does have a win rate of about 55 to 65%, so it will not win every time. However, if you keep the amount that you trade the same every time and you make sure that you manage the risk to reward just like I'm showing you in this video, it's more than likely that you'll win more times that you lose. And with this risk to reward, you'll lose a lot less when you lose and you'll win a lot more when you win. Just to do some quick math on that, let's say you won this trade twice, right? Monday and Tuesday you won the trade. You risked $100 to make $300. Both times you hit, you made $600 for the week. Now let's say the last 3 days of the week you lose that trade. Each day you lose $100. You made $600 and then you lost $300 from the losing trades. So you would still have a positive P&L of plus $300 for the week. If you want to see more about this strategy and how it works, I'll link it in the description. I hope this video on how to use this indicator made it more clear to you guys. Feel free to join the Discord if you want to learn more about this indicator or trading. I'll also link you guys to my Discord if you guys want to join in the description. I hope y'all found this video helpful. If you did, please like, subscribe, and hit the notification bell, and I'll catch y'all on the next one.